Hey, we are live this morning for the next Bank of Canada rate announcement happening today at 10 a.m. Uh, what can I say? It's pretty highly anticipated, and we again have our mascot with us here today. Let me just grab her. We have interest rate with us this morning. She will be predicting the interest rate announcement in just a few moments. All right, say hi, interest rate. Hey, everyone. This is my guinea pig mascot for the Bank of Canada interest rate announcement show. I just have her on my desk this morning. And before I get into it, I'm going to tell you some of the rules she has. So she thinks rates are going to go up. She's going to eat the lettuce. And if she thinks rates are going to stay, she's not going to do anything. And if she thinks rates are going to go down, she's going to eat the hay. So I'll keep you guys posted here as we continue on with the show this morning. We have the announcement coming out in about 13 minutes here on Canadian Mortgage Weekly, Canada's only weekly live mortgage news video podcast. That's a mouthful, but this is episode 147, and I'm going to be just covering off some of the articles that are coming out this morning as to what is currently happening in the market, what people think are is going to happen, also what people think, what news outlets are saying they think are going to happen, as well as what I think is going to happen with the interest rate announcement this morning. Hugely anticipated. I know that we've had a large number of rate increases this year already, and to have just another one upon us, it seems so heavy. I know that there's a lot of mortgage borrowers out there struggling right now in variable rate mortgages, and it's really tough to see everyone in this situation have such high mortgage payments that have variable rate mortgages. So just getting into it this morning, some of the news that has been leading up today, we've seen unemployment rise 2 months in a row now. I know that in the past, unemployment has been a hard stop for the Bank of Canada with rate increases. And a lot of times what they'll do is a lot of times what the Bank of Canada will do is actually lower rates when the jobs report comes out and unemployment has gone up. But that hasn't happened because as unemployment has gone up, we've actually seen the amount of jobs created go up as well. And that's an interesting anomaly because more people are looking for work and more jobs are being created. That, from what I've been reading, has a lot to do with the amount of population in Canada. We hit 40 million people last month in June, and we have so much immigration happening that's one of the anomalies we are seeing. So not only is unemployment going up, but more jobs are being created. Inflation pressures are hanging around still, which is why a lot of the talk is surrounding another rate increase today. The last rate announcement we've seen is the June 7th, 2023 rate announcement, which had a 25 basis point increase. And that brought the policy rate with the Bank of Canada up to 4.75%. And it brought prime rate up to 6.95%. And a lot of people in mortgages, in variable rate mortgages, they are either at prime or prime minus 0.1, prime minus 0.2, prime minus 1. So they're sitting at 5.95 to 6.95% currently. Such a high rate compared to what I've seen in the last few years. If you're just joining me now, my name is Joe Bladek. I have my rate mascot here today. Come on, interest rate. Let's say hi to everybody. All right, she's my guinea pig. She's my mascot here today on Canadian Mortgage Weekly. We're going to have her help predict the interest rates this morning. How you doing? You doing all right? I got some lettuce and some hay for you. All right, so you're going to tell us whether or not rates are going to go up or down or stay the same. If you eat the lettuce, you're going to tell us the rates are going up. If you're going to eat the hay, rates are going down. If you're going to do nothing, nothing is going to happen with rates. They're just going to stay the same. So she has actually correctly predicted the last few rate increases, which has been, well, the last few announcements actually, which has been really interesting. So we'll see how she does this morning. So what's the bond yield been up to, and why is that important? Well, I've been following the Canadian 5-year bond yield, and the 5-year bond yield is what 5-year fixed rate mortgages are based off in Canada. And that has hit a high of 4% this week and last week. That's actually the highest it's been since the 2008 financial crisis. And because of that, fixed rates have increased drastically. And that's really slashed affordability. I've seen people lose $20,000, $30,000 of affordability in the last 2-3 months alone from the bond yield going up, which has caused fixed rates to go up. And fixed rates are still lower than variable rates. So variable rates not going to really help you very much today to afford more home. Fixed rates will actually get you more home. But fixed rates have been increasing. And since the last rate announcement on June 7th, I've seen the bond yield go up, indicating that the market is predicting a rate increase. And because of that because of the bond yield going up the way it has, it's actually pushed fixed rates up since the last increase, the last rate announcement in June. And we've actually seen an increase of the bond yield over 25 basis points, which has been really significant because the last rate increase was only 25 basis points. All right, so if you're just joining me here today, my name is Joe Bladek. We're going to be doing a live rate announcement here in 7 more minutes. I'm talking about some of the news that's coming out, what people are saying while we wait for the rate announcement to come out. We're live on TikTok, Instagram, LinkedIn, Twitter, YouTube, Facebook. If you're joining in, comment below. Let me know what platform you're on. Would love to hear what you guys think is going to happen with rates this morning, because as noted, I have my mascot here this morning. Her name is Interest Rate, and she's going to be predicting the rates as well. And she loves being on my show. She loves being here with me because she obviously gets to eat hay or lettuce or do nothing and just chill out with me while we chat about interest rates. How you doing? You're still hanging in there? We got 6 more minutes until the announcement comes out. What do you think is going to happen there, Interest Rate? All right, we'll just put you down here, and we'll see what she does here in just a moment, and the prediction that she comes out with. So what's the CDOR rate doing? Well, it's actually increased to 5.39%. The CDOR rate is what the banks base their variable lending at. CDOR predicts and specifies whether or not variable rates are a competitive option, which with the CDOR rate being less than a 2% variance to the prime rate right now means that variable is not a competitive option. And I think we all know that today. I really don't like how rates are so high right now. It's so hard to help clients right now with their affordability. But here we are. Okay, so what's been happening? What's the articles saying? Inflation has been slowing down in Canada, 3.4% currently in Canada, still above 2%, which is not great. US inflation actually just came out this morning. It's down to 3%, so lower than Canadian inflation right now. And that's a big drop from the month prior, which is great news. Great news for inflation data coming out of the US this morning. The prior month, it's 3% this month. Prior month was 4%. So a whole point drop here on inflation in the United States. That just came out this morning. So we'll see what happens. If you're just joining me now, my name is Joe Bladek. This is Canadian Mortgage Weekly Live. We'll be doing a live rate announcement in 5 more minutes. And as we're waiting for this rate announcement, we're just covering off some of the news articles that are coming out this morning talking about inflation, interest rates, and what they think is going to happen. And obviously, for another time, we have my mascot interest rate here on the show, helping me with the production and predicting the interest rates for today. So say hi, interest rate. Hello. All right. She's amazing. She's my little mascot here. We'll see what she predicts here. She's predicted all the rate announcements since she's been on my show. Clients, what are they saying? Well, clients are feeling like rates are extremely high. They are really feeling the affordability crunch right now as well. Those clients that are jumping into the market right now, they're feeling like they really can't afford what they want. They're feeling like it's really hard to find a house in their price range. They're feeling like they really don't want to have to add co-signers, but I'm seeing a lot of my clients, even high net worth earners, having to add co-signers right now to their mortgage to be able to just get the house they want during these times. Many people are locking in for 2 to 3 years. Some people are locking for the full 5-year terms. Those locking in at 2 to 3 years think rates are going to go down in 2 to 3 years. Those locking in for 5 years think that rates will keep going up over the next 5 years, and they don't want to hit a huge rate increase on renewal after 2 to 3 years. Very differing opinions. There's some of my clients that are sticking in variable rates as well, hoping that the storm passes soon and variable rates do come right back down shortly. So let's see what else is happening. Articles are saying that all banks are still also forecasting another rate increase of 25 basis points. So banks are forecasting that. We'll have to see what actually happens there. What percentage of people are losing their homes in Canada? That really, Canadians have been pretty resilient right now with homes and mortgages. Historically, Canadians have always been able to make their mortgage payments. I've seen clients really scrape together a mortgage payment each month. They will usually forego credit card payments, even property tax payments, just to make a mortgage payment. Right now, we're not really seeing any increase in that, but the Bank of Canada and OFSI, the Office of Superintendent for Financial Institutions in Ontario in Canada has mandated that the banks increase their stability buffer to 3.5%. Now, that's a huge increase because during the pandemic, the stability buffer was around 0.5%. And that's a fund where the Bank of Canada, the banks use for foreclosures and all that. So we'll see what happens there. Okay, my guinea pig here, interest rate, is eating the lettuce. She is predicting a rate increase. We're about to find out what the Bank of Canada is going to announce here in just a moment about their interest rate announcements. It's 9:59 a.m. Well, we're going to have that data here in just a moment. Interest rate, my mascot, is eating the lettuce. She just took a bite. She's not eating very much, though. She's taking a pause here, so we'll just hold her up for everybody to see. Say hi, everyone. You're not eating. Does that mean you changed your mind on your prediction? No? This is interest rate. If you're just joining me here today, she's my mascot on the Bank of Canada rate announcement channel here for Canadian Mortgage Weekly. She has correctly predicted the last few all the rate announcements here on Canadian Mortgage Weekly. And we have an announcement. We have that the Bank of Canada does raise policy rate by 25 basis points here on Canadian Mortgage Weekly. They did increase rates by 25 basis points. This is the announcement that just came out seconds ago here, everyone. I can't believe it. That means prime rate now will sit at 7.2%. 7.2%. I have not seen prime rate this high in my entire career. I can't believe it. This is really going to slash affordability for Canadians even further. I'm going to see probably a lot of calls come in later today with those in variable rate mortgages, with a little bit of a panic about what they should do. Now, as I mentioned, a lot of folks that are in variable rate mortgages, the reason why they are staying in variable rate mortgages is because they believe this storm will pass soon. And I'm not really sure if the storm is going to pass soon any longer. We are seeing the Bank of Canada take a very aggressive approach. And this is considering, even still, that unemployment has gone up for 2 months in a row. And the US just announced that their inflation has decreased from 4% to 3% for the month of June. What the hamster has to say? Let's see here. Let's see what you have to say here, guinea pig. Interest rate. Why did you predict that rates were going to go up today? Well, she gave the typical politician answer, no substance. So I think that in this case, we'll probably see her continue eating the lettuce that she ate just a seconds ago here, predicting the interest rate today. Any other rodents? Well, I don't have any other rodents here, but I do have my guinea pig there. Her name is Interest Rate. And unfortunately, she predicted correctly that rates are going up this morning. So, what does that mean here for anyone in a variable rate mortgage? In Canada, this means that anyone with a variable rate mortgage will have either their payments go up or their amortization go up. And this is a lot to do with the fact with either if you're in a fixed payment variable rate mortgage or a variable payment variable rate mortgage. And I'll explain the two differences here. With a lot of banks, uh, for example, Scotiabank, they have a variable payment, which most people decide to take. So when rates do go up, the payment goes up. When rates go down, the payment goes down. Other banks, for example, TD Canada Trust, they have a fixed payment variable rate mortgage where the rates go up, your payment stays the same, but your amortization increases, which means that the amount of time that you have left to pay off your mortgage can increase. So I've seen some of those clients have mortgages where the amortization has increased from 25 years to 35 years to 45 years to 55 years and beyond. That's funny. Well, I'm really excited to hear from my TikTok fans here this morning. I'm getting some really interesting comments here. Yes, more people with a mortgage will not own a home. That is absolutely right. I'm seeing a lot of folks right now having a extremely difficult time getting into the market. They there was an article that came out just 2 weeks ago saying to buy a 1,500 square foot home in Canada, you need an income of about $175,000 for a 1,500 square foot home. That's not even a mansion of any kind, and you need an income of 175,000. And I did some videos, if you want to follow my account, about this, where most people to afford a house of this caliber now, and if you need a mortgage, are putting four people on title. So it's mom, dad, son, daughter, they're all working, they're all going on the mortgage together, and everyone is living together. This is happening more frequently than you think now. And with that, it's really causing havoc for those who are coming out of, say, marriages, getting separated or divorced. If you're getting separated or divorced and you have an income of, say, $90,000, and that's a combined income from your full time salary job and child and spousal support of 90,000, those folks can only afford a home of about 350 to 400,000. That's including the down payment. And what's that going to get you in today's market? In today's market, that will get you a home in Winnipeg, Manitoba. And in Ontario, you're really not going to find very much in that price range. All right, if you're just joining me here today, we're doing a live rate announcement on Canadian Mortgage Weekly. The Bank of Canada just seconds ago did decide to increase rates by 25 basis points. This has pushed the Bank of Canada's policy rate to 5% from 4.75%. This has increased prime rate now from 6.95% to 7.2%. Prime rate is what borrowers with AAA credit scores are given on mortgages. Lines of credit, for example, a lot of lines of credit have a interest rate of prime plus 1 or prime plus half. So we're going to see home equity lines of credit have interest rates now of 7.7 to north of 8%, just north of 8%. Now, just 2 years ago, I saw lines of credit under 2%. It was amazing. Folks had access to pretty much free money. But because of these interest rate increases, I'm now seeing folks with lines of credit have minimum payments that exceed their income. As a matter of fact, I've just left a client's house 2 weeks ago. We were discussing how her line of credit exceeds all her income every month. And she's not even able to make the minimum payments on that. Whereas just 2 years ago, it was very manageable. And think about it, if those who have a AAA credit are able to get a home equity line of credit at north of 8%, what does that mean for folks with bad credit and that they want a line of credit? What does that mean for folks that have challenged credit because of past circumstances? How will they survive with rates? I've seen a lot of those interest rates north of 12 and 13%. So if you're just joining me here today, my name is Joe Bladek. Here on Canadian Mortgage Weekly, the Bank of Canada has raised the policy interest rate by 25 basis points, indicating that they are continuing quantitative tightening. That brings prime rate to 7.2%. That's the prime rate, 7.2%. And that essentially is going to slash affordability. As I mentioned, anyone who has a variable rate, variable payment mortgage will see their payments go up. So expect a letter from your financial institution with that information coming out within the next 30 days. Also, anyone with a home equity line of credit will see their minimum payment go up. So expect a notification on that in the coming weeks. And anyone also with a variable rate fixed payment mortgage, you will see your amortization shift to a longer period. So if you're now at 25 years, which most people in variable rate fixed payment mortgages now have already increased 25 years, but you could see your amortization increase by 4 to 6 years based on this information that had just come out from the Bank of Canada. So the Bank of Canada did make some comments, however, with this announcement this morning. They have indicated that global inflation is easing. They have indicated lower energy prices, and they have indicated a decline in goods price inflation. Now, the reason why it looks like that they have raised interest rates this morning is to do with the fact that there is robust demand and tight labor markets, and that is causing persistent inflationary pressures in services. So, services specifically. Also indicating economic growth has been stronger than expected, and indicating our neighbors to the south have also had strong economic growth in the United States. And consumer and business spending is surprisingly resilient. So, with that, looks like there's a lot of demand. People and businesses are still spending money, causing this economic activity to spur. And with that, the Bank of Canada wants to slow things down, but because they can't slow things down, they are raising rates. But again, that's causing havoc for anyone in a variable rate mortgage. If you right now are in a variable rate mortgage, I'm curious, are you considering locking in at these higher interest rates now? I'm seeing fixed rates approaching 6%. I'm seeing 3-year fixed rates in the mid sixes, 5-year fixed rate just under six, but the 3-year fixed rate is about 6.5% right now. Those in a variable rate mortgage with prime rate at 7.2% now as of today, are you considering locking in, or are you considering weathering out this storm? I mean, inflation in Canada right now, let's take a look at inflation in Canada. I know that the June numbers are coming out later this month, but right now the May numbers are sitting at 3.4% for CPI, Canadian inflation. I know that the Bank of Canada is hoping to get inflation at under 2%, which is a goal that they've been working on since last year when inflation peaked at 8.1% just 1 year ago. So we'll have to see what happens. And if you watched my last rate increase or rate announcement video on June 7th, I had mentioned that they will probably increase rates on July the 12th because they will not have the data yet from June for inflation, which would have been impacted from that rate announcement on June 7th. So perhaps this rate announcement is due to the fact that we just don't have the data for June yet. So when's the next rate announcement happening? The next rate announcement is happening on September the 6th, 2003. That will be a Wednesday. Folks will be headed just back to school at that point for kids. Let's see what's happening here on the folks that have other accounts. If you have a credit card, how are you going to be affected? Well, credit cards usually have fixed interest rates for the most part. However, there are some credit card accounts that have variable interest rates. Those will be affected slightly on minimum payments. We will see also unsecured lines of credit be affected with a 25 basis point increase this morning. If you have a unsecured line of credit with your financial institution, you will see your minimum payment go up as well. The amount of interest charged will go up, obviously. And what else is going to happen? Well, anyone with a car loan, car loan rates have gone up considerably as well. And a lot of people do have variable rate car loans. And with those car loans, depending on the product you are in, you will either see your payment go up on your car loan, or you will see that the amount of time it takes to pay off your car will increase because maybe you have a fixed payment, but the interest added will increase the amount of time that you will take to pay off that car loan. So, how are people buying houses these days? I'm seeing a lot of folks buy houses that have 3, 4 people on title. No longer can the single person with a good income really afford any type of home in Canada. The single person, the high earner making $90,000 a year, which is the top 5% really in Canada here, which is a good earner can only afford a $400,000 home on their own. So to buy the average price home around $729,000, which is the average price home in Canada right now, you need an income of over $150,000 to be able to do that. And with the average Canadian making around $50,000 a year to $60,000 a year, that means that there are 3 to 4 incomes required just to get into the average price home. As I mentioned earlier on in my show, there was an article that came out last week that I did some videos on. If you want to follow my account, whether it's TikTok, Instagram, Twitter, Facebook, YouTube, or LinkedIn, you'll see that I posted some videos all about how to buy a 1,500 square foot home. That specific type of home in Canada now requires an income of $175,000 for the person getting in, with minimum down payment. So, quite a substantial increase to what I saw just 2, 3 years ago. In my 13 years experience, I've never seen rates this high. So, it'll be interesting to see what happens going forward. If you're just joining me here today, let me grab my mascot here this morning. We had my guinea pig this morning. Her name is Interest Rate, named after interest rates here in Canada. I've been in the business now for 13 years, and I've never seen a guinea pig correctly predict the interest rate announcements with the Bank of Canada so well. And interest rate, you've done a great job this morning predicting interest rates with the 25 basis point increase. I know that no one wanted to hear that, and it's really not your fault, but really, maybe it is her fault. I don't know. Time will tell. We'll see what she says on the next rate announcement, which is September 6th, 2023, which will be a Wednesday. All right. So what else is happening here? Those with, as I mentioned, variable rate mortgages, home equity lines of credit, variable rate car loans, unsecured lines of credit, and variable rate credit cards will have their payments affected. You should receive a letter or a notification from your lending institution in the next 30 days or so. Those who are in a variable rate mortgage, love to hear what your plans are right now. Do you feel like it's the right thing to weather out the storm? Or do you feel like it's better to lock in right now with fixed rates lower than variable rates, but still very high in around the high fives, low 6%? I know that folks right now are really considering locking in. A lot of clients that are moving or were moving right now are considering just staying put until this storm passes. And 4 more times, eh? Wow. I have a viewer here that's suggesting they've heard that the Bank of Canada wants to increase rates 4 more times. That would bring the policy rate to over 8%. I I don't know if I will be able to stomach that. Actually, that will slash affordability even more. I know that with the last rate announcement, I saw some clients that were waiting on the fence see their affordability drop approximately $20,000 by just waiting to put an offer in after the rate announcement. And now, for the folks that have been waiting around for this announcement, putting in an offer on a home after today now, we'll see those affordabilities drop another 20,000, maybe plus now, because the interest rate is that much higher. So every time the rates do go up, unfortunately, you afford less home. That's just the way it is, because lenders need to keep a certain amount of income for groceries, taxes, utilities. They only allow a client to spend X amount for their mortgage payment. And when those mortgage payments go up because interest rates go up, those clients see a cut in affordability. It's crazy, but affordability will drop again after today. And what do you guys think will happen in the housing market? Do you think that it will slow? Something that I've been very interested in is that in the housing market, we have seen the national house price grow to $729,044 this year. That is as of May 2023. And that indicates that over the last 4 months, May, April, March, and February, we saw consecutive increases in the annual Canadian house average price. That is a change compared to the drop in prices we saw from February 2022 to January 2023. We saw a drop of almost 30%. Do we think that house prices will start to drop again because of this rate increase? It'll be interesting to see. now that the Bank of Canada has raised rates another 25 basis points if the housing market will continue to go up. It's mind-boggling. In my 13 years in the mortgage industry, with rates this high and prices of houses going up, it only indicates to me that there's really a population and demand factor that's keeping prices up so high. As you probably heard, Canada hit 40 million people last month. We have record high immigration in Canada. And when those folks apply for a mortgage, they're applying for a mortgage. They've been in Canada sometimes only 6 months, and they're applying for a mortgage because the whole family has come over and immigrated to Canada. The whole family has jobs, all 4 or 5 of them sometimes, even sometimes 6 of them. We have grandpa, grandma working part time. We have mom and dad working full time, and we have son and daughter working full time. So 6 people all immigrated to Canada. They are able to save money very quickly because they live together and they pool money together and they buy a home together with 6 incomes sometimes, and that doesn't phase them at all to be able to go into a house all together, and they're able to buy a house. But because the single person and the normal family, which has 2 working people usually in Canada, is competing with those families, I think that's what's causing price increases. Immigration, and just the fact that there's so much demand from immigrants to buy a home as soon as they get into Canada. There's actually a lot of programs that the government has for folks that are new to Canada to get into a home very quickly. It's pulling the rug out from normal Canadians that are saving and trying to get into the market. I saw I'm dealing actually with a lot of Canadians. One has $70,000 saved. They both work, husband and wife. And because of their situation, even though they've saved $70,000 on their own, together they make just over $100,000. They're only able to afford a home of $450,000. It boggles my mind because that doesn't even get them into a 1,500 square foot home. That doesn't even get them into a average price home in Canada. It's quite crazy. So, as you guys are watching my show today, I wanted to thank you for uh, watching. Interest rate, my mascot here this morning. Thanks you for watching. Uh, Good job correctly predicting interest rates going up by 25 basis points this morning. Interest rate. I don't like your prediction at all. However, it's something that both myself and my clients and everyone in Canada will have to deal with now with this rate increase happening in Canada. If you're just joining me here today, the Bank of Canada did increase rates by 25 basis points. I encourage you to follow me, hit that plus button. Would love to see you on the next rate announcement on September 6, 2023. And I typically do release videos every day on my channels on TikTok, Instagram, Facebook, YouTube. I also stream to Twitter and LinkedIn. Would love to see you guys follow my account. And I typically talk about ways that you can afford more home, some mortgage hacks, and would love to see you guys join me as I try to apply my 13 years of mortgage experience to helping Canadians get into a home in these challenging times. Thanks for watching, everyone. Appreciate all your comments this morning. And, I really don't know what to say. With prime rate now being at 7.2%, it's really going to slash affordability that much further, and probably by about $20,000 for the typical Canadian. And as I mentioned, we had one viewer here comment that they've heard that the Bank of Canada wants to raise rates 4 more times. which is quite crazy in my opinion. Let's see here. Yeah, so we have also a commenter here on one of my channels commenting that they deliver packages and sometimes they'll have a family of 20 will be sharing two very large houses next to each other. You know, as I mentioned, we are seeing folks go on title, 4, 5, 6 people go on title just to be able to pool their income to be able to afford a home in Canada. It's not great for the single person or the family that has two incomes to be able to get into a home. Makes it virtually impossible for those folks to get into a home. Good earners, good savers, it's just you don't have six incomes. It's just not possible. So, love to see you follow. Thanks for watching, everybody. I got to get back to it. I'm anticipating a lot of phone calls today from folks just asking about variable rates and what's going to happen with their mortgage. So, I need to get back to business. If you want to reach me, feel free to connect with me on social media or reach out to me directly and we can book an appointment and chat, or we can chat on the phone about your variable rate mortgage. And perhaps I can give you some advice if you're in Canada, specifically Ontario, with your variable rate mortgage and how I can help you uh, through these challenging times. I hope you have a great day, and we'll see you next time here on Canadian Mortgage Weekly.